Hello, traders. It's 8:03 a.m. Chicago time on Wednesday, the 12th of December, 2018. Thanks for joining me today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The sentiment this morning, again, solidly risk on as it was yesterday. We're basically opening, we're not opening, but we could potentially open at the same price as yesterday. Yesterday, the open was at 26.73 and a quarter. We're currently trading 26.73. So yesterday we chopped and drifted down into the prior day's range, pushed down to 26.20 or so, and came back up and then closed right against the prior day's point of control. I'll cover that in a minute. And then this morning we're gapping up yet again. So very interesting, but risk on crude oil is up 2.27%, popping again here. Looks like a lot of chatter on the news. I wasn't sure if it's related. So crude is up 2.28%, trading at 52.82. Euro stocks, the Europeans come in strong this morning. Euro stocks up 1.5%. The NASDAQ follows up 95 points. The laggard today is the U.S. Treasury bond. Remember yesterday during the gap higher, the U.S. bond was, I believe, unchanged. Reminder that the U.S. Treasury bonds, actually the interest rates in Europe and in the U.S. are trading March 2019 already, which brings me to this important announcement. Tomorrow's rollover. It's official rollover at 8:30 Central, 9:30 Eastern. So guess what? Tomorrow we start quoting March 2019. The contract designation is H9 or H19, depending on the platform. So we'll be looking at ESH9 starting tomorrow. Many people do not like to roll on the official rollover day. They prefer to wait till the volume transfers over, which is by Friday, open or so. So they wait a day. I do not. It doesn't make a difference to me. So I just move on to the next contract. My data and my historical data all gets shifted into the new contract. Reminding you that tomorrow you need to do a full download on U.S. equity indices if you roll, so that hopefully you're using a feed that back adjusts the futures contracts to each other, so that you don't end up with a non-existent gap. So this is what we're looking at. As far as announcements. So tomorrow we're trading March. Looking at what we expected yesterday. So the plan that ended up working out is scenario 3. I was looking for a pop higher and a pullback with a gap to remain open on scenario 1, and then we turn back up, take out the overnight high of 26.78 and push. But the market did not have it in it. We ended up with scenario 3. Scenario 3 ended up pushing to 26.20 down here. Just drove right back, popped out, and it ended up closing right in here. So scenario 3 looked a lot like this. And so that's what ended up happening yesterday. The market was very, very responsive to the prior action, and that's how it's been. We have a run up. On a gap down. We end up closing this big gap last Thursday, and then Friday opens up, pushes into the range of Wednesday and falls off. It just seems like every time prices push higher, it's an opportune time for higher time frame sellers to step in and take this back down. So this is what we expected. This is what we actually got. Pretty choppy. So we get the chop at the open. and then we start to drift down. We get back into the prior day's range. Again, once the move happens, we leave this mid behind for most of the session. We ended up rotating back up into it. Saw the mid at the prior day's high, saw that as an opportunity. It ended up pushing through by about 5 points. Not fun. And then it turned back over. The profile yesterday that was left behind leaves three distributions. The market continues to auction all the way through, continues to seek value pretty actively. Yesterday's range is about 54 points. That's pretty wide. We usually would cover that, historically would cover that in a week. And so what's going on here is that the market's continuing to auction both ways. We're still battling to find value here in the 2600 figure, and it's a pretty tough trade in my opinion. It's chop, 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 and break. There are a lot of these pretty wide zippers. You have to, as I talked about last week and Monday and so on, you have to use a wider stop and smaller size. And it's not a market for somebody who's got less than the initial margin in their account. In other words, if you're below $6,600, really it's not advisable to trade the ES live. It's a good time to kind of look for something else, or to simulate, I guess. So that's what we did yesterday. We ended up driving back into the range. We ended up pushing the point of control back into the prior range. We balanced out yesterday. We balanced out that gap up. There is news this morning on China. It looks like more strides are being made towards. So there's this towards the efforts by China to open up its markets, and so that's where we stand. Here's the big picture again. Let's expand this. Here's the big picture. We're still battling in the zone here. We expanded the zone lower below 2603, and we've popped up above there. It looks quite weak on the low. It looks quite bearish to me still. The effort by buyers has been rebuked every time we try to push and hold above 2800, and we were hanging out at the low end of this box that you have in front of you that used to have a low of 2603 and now enjoys a low at the 2583 area from 2 days ago, from Monday. So it's just looking kind of heavy still. So I would say that until we push back above 2750, I would say that the market is tending towards selling any pops higher, as if to liquidate or to get out of long positions or to accumulate short positions. So that's what we have in yesterday's action. Overnight, we open, we dip down, and then we basically create this channel in the overnight session that's pointing upwards, and we walk prices up. We very cleanly reject the low, and we are shifting this point of control higher as we move along. So what we have in the overnight session is somewhat of a trend type profile, and the market keeps pushing higher, consolidating, pushing higher, consolidating. You can see that all the way through. Push higher, consolidate, push another high, pull back, push another high, consolidate, push another high, consolidate, push another high. We just had a big push up, not on the release at 7:30, which was for CPI, came in line, but just after. So reportedly, the the piece that caused this spike here is potentially this reportedly preparing, China's reportedly preparing to replace Made in China 2025 plan. Revised plan would downplay China's efforts to expand its manufacturing dominance to provide greater access to foreign companies. So that's what's cooking. Okay, so that's that. Well, let's move on to what we expect for today. For today, we are really looking at, real quick, checking out the calendar. There's not much left in today's release. The overnight session only brought industrial production in Europe and CPI. We do have crude oil inventories at 11:30 Eastern. It says 11:30 Eastern. Should not be 10:30. I don't think there's a holiday. It should be 10:30 unless something's changed. I'm not sure. This calendar's potentially wrong. Looking for a draw on crude oil, and we're looking for monthly budget statements. So nothing really major there other than surprise news as the day unfolds. So this morning, again, same type of scenario. We are still looking for the market to open up in the upper distribution, potentially breach the overnight high. Remember, yesterday's overnight high was 26.78. I believe today's is 26.77. We have the exact same scenario as yesterday, as in terms of prices as yesterday. I'm expecting this to get whacked. I expect the impulse to come on the downside, and I expect this to drift down towards, again, 26.48, 26.50 before we see a bounce into the close. So I'm looking for responsive selling as the primary push for today. Again, every time we've popped up, we've tended to sell. All of that gets thrown out if we have news in the mix. Secondary scenario, still looking for an open auction, looking for a drift down initially, impulse up, and then to start pushing the range higher. I'm really not expecting much in terms of range in the scenario that we have here and the way we're configured. Not looking for much in terms of range. If it does push down, then this is drawn incorrectly in my plan. The point of control from yesterday is really the point at which the market turns. So we're looking for 26.38 to the downside, potentially lower. The overnight range is quite high. We already have 50 points almost in the overnight range, 49 points. So that's a lot to play with already. So it's the day range is not expected to be as wide as it was yesterday. I expect this to rest a little bit today. We do have a higher high, higher low on yesterday. We do have balance on the last two sessions, Monday and Friday. It's a bit messy in this area, but I'm looking to sell whatever pop comes in. Now, if I see strength, if I see a drive higher or something, I'm not going to sell it. But if it's operating naturally, I expect that pop above 26.77 is likely to be sold against the 80-84 area, and I'm going to look to sell that back into the range. That's the key play for the day. Good luck today, and I'll catch you tomorrow morning. Take care.